Good afternoon, ladies and gentlemen. My name is John Williams, and I'd like to welcome everybody to today's webinar here with LV Grow Markets. Now, we're in a very important month, especially for any trader who's trading the British pound, no matter what pair it is, or maybe some British stocks. Whatever type of trader you are, this is a massively important webinar with regards to your daily trading. The webinar is going to be based with regards to Brexit and what Brexit is affecting and how you should be trading this month in order to make sure that you're not overexposing yourself, that you are trading using the right strategies and looking at the market with the right perspective. Now, the webinar is going to be approximately 40 minutes. I will try and keep the terminology and everything as basic as possible, because I do understand that there's quite a few new traders which have signed on to watch this webinar. Now, the webinar, as I said, is going to be based mainly around Brexit. Now, I'm going to start off with some of the basics, just so you know exactly a little bit of the background with regards to Brexit, and then I'll be speaking a little bit more in depth with regards to how the market has been moving, how it's likely to be moving, what you need to be keeping an eye out for. We're going to talk about risk management, exposure, and also trading plans as well. Now, to start off, I just want to give a very quick introduction with regards to myself. Possibly some of you may have not watched from my previous webinars. My name is John Williams. I am a CMAP qualified financial advisor. Started off in the UK several years ago, approximately 7, 8. I've been doing Forex seminars in many countries, including Europe, the Middle East, and Africa as well. I've been trading for many years, and I'm the market analyst here at LV Grow. Now, should you have any questions with regards to today's webinar or in general, then feel free to ask any questions at the end of the webinar. Or alternatively, I will put my email address at the end of the webinar, and you can contact me at any time. Now, again, a very quick introduction just for us as a brokerage. LV Grow, the main thing that you need to know more than anything else is that we're an online broker. So the good thing is you can access your investment account no matter where you are in the world. As long as you have access to Wi-Fi, then you can access your trading account to open and close trades, investments, etc. The other thing I want to draw your attention to is that we've got a few market analysts here, including myself and also personal mentors. Now, you can arrange to speak to either one of us with regards to trading plan, risk management plans, with regards to how you should be trading, training, and also strategies. Now, very quickly, just to look through what we're going to be speaking about today. As I said to you, Brexit, how the market is likely to react to Brexit. I'll get my lays out there. The future of the UK, trading plans based on Brexit, what will happen in the case of a no deal. Of course, many of these are purely speculation, but I will be speaking to you with regards to my analysis, as well as general analysis, which I have obtained from a variety of different analysts. And also we're going to be looking at the basics of Forex as well, and how you should be trading and price movement. Now, I don't want to spend too much time speaking about what Brexit is. I'm sure most of you, especially if you're within the European Union, know exactly what Brexit is. In broad terms, Brexit is the UK leaving the European Union. So as you know, the European Union is in a sense a federation of different countries under mainly one currency, and under trade agreements, political agreements, security agreements. They're in a sense a partnership, we can call it. Now, what Britain has decided over the past 3-4 years is that they want to leave the European Union. This was done by a referendum in which the British people voted to leave Europe. Now, I don't want to spend too much time talking about that. What we want to go over to is speaking about exactly how Brexit is affecting your trading. Okay. Now, the first thing I want to speak about is no matter what you are trading, whether you are trading currencies, whether you are trading stocks or commodities or whatever it can be, the pricing of that security is always going to be largely based on supply and demand. Okay. Now, the higher the demand for something is, then of course, the more the price is likely to move upwards. Now, when demand is affected and it is dropping, then so will the price of that security. Now, on the same, it's got a similar effect with regards to the supply. The more there is of it, the more chances there is of it losing its value. The less there is of it, the more chance there is of it being more expensive. Now, if I give you a very simple example, we could look at gold and silver. If we went back hundreds of years ago, they were priced more or less about the same. Now, silver kept being mined out of the ground. There's a lot more silver out there in the world than there is gold, which is why in today's market, gold is valued at approximately $1,500 per ounce, whereas silver is valued approximately $17 per ounce. Okay, because gold is rare, whereas silver, yes, it is rare, but nowhere near as much as gold. The same thing applies to the demand. There's a higher demand for gold, which is why it's priced higher. Now, the fact is that everything that everybody is saying, whether it is the Prime Minister, Boris Johnson, David Cameron, Theresa May, analysts or the European Union are saying, everything is based on speculation. However, the one thing that investors hate, okay, is something called fear. Okay, now you as an investor and me as an investor, whoever you may be, will never invest or place your money somewhere where you have a fear of losing it. Okay, now what Brexit brings about is the fear factor. Nobody knows what is going to happen post Brexit or even tomorrow or the day after. Okay, now because of this, the value of the pound over the years has been losing its value massively. We had a brief period, no more than two, where there seemed to be good signs that the negotiations are going well. We've got a Brexit deal and the UK is going to leave the European Union with a trade deal, with a Brexit deal, which is of course analysts and traders viewed it as positive for the pound. It brought back stability for the pound, and yes, as well, also for the euro. Now, when we lost that factor of security, when the deal which was negotiation failed to go through Parliament, there was a lot of negativity around the deal with regards to the backstop. We're not going to go too much into that as well. At that point, the pound started to lose its value again. Now, over the last year, we've seen any indication of a deal being positive for the pound, and any kind of deal, any kind of indication of a no deal has brought a negative movement to the pound. Now, there's also a fear with regards to companies in the UK. Now, if the pound loses its value, it means that companies in the UK have to spend more pounds to buy foreign raw material or services, whatever it could be that they're doing abroad. They have to spend more on it. It's more expensive. This is likely to affect expenditure. This is likely to affect profits as well. So the effect of Brexit is not only affecting the currency, but also indexes with regards to the UK and the European Union as well, and also stocks as well. Now, I want to actually speak with regards to a no deal. What are the chances of a no deal? Now, this question, which has been asked to me over the last 3 months, at least on a weekly basis by traders emailing me, the fact is that the chance of a no deal is continuously changing. What we do know from what is being said by the Prime Minister, by its government and its board, and also the paparazzi in general, that is that on the 31st of October, whether there is a deal or not, the UK will be leaving the European Union. Now, I'm sure you've heard that on the news. I'm going to say to you again, because I cannot make that more clear. It is a pivotal point in the trading markets, okay? Now, what we have heard in today's speech, which was done by Mr. Boris Johnson, the Prime Minister of the UK, is that they have put forward alternative deals to the European Union, which are currently being assessed by the European Union, which he believes is the best chance of them leaving without a deal, and gave a lot of positivity on the chances of that deals. That even created a higher buy demand for the British pound for approximately 35 to 45 minutes after the speech. Now, analysts are advising that the Europeans are not willing to change anything with regards to the deal. We've heard that on countless occasions. We heard it a massive argument against any changes by the French Prime Minister, by the French President, sorry, also the German Chancellor. Very recently, just the other day, we heard something similar from Greece's Prime Minister and also Italy's. And very recently, we also had a very negative speech against it by the Spanish Prime Minister also. Now, what we need to be keeping an eye on is the negotiations. Is there signs that there is or is not going to be a deal? Now, as I said to you, any chances of a deal, you need to be trading for the pound to be going up. Any chances, the bigger the chances are of a no deal, you need to strictly be keeping to the pound losing its value. Now, of course, there's two ways you could be trading. You could be trading the trends in the market, or alternatively, you can be trading the retracement and price corrections. Okay, so of course, depending on your trade, depending on what strategy you're using, will depend on how you alter your trading plan and your risk management plan. But we will look at that a little bit further on. Now, with regards to if the British government decides to leave on the 31st of October without a deal, something that we can definitely be certain of is that the Bank of England will cut its interest rates. Now, the UK at the moment does have a healthy economic growth. They're hitting the inflation targets, the PMI targets. The interest rates in the UK have slightly increased over the last few years. Not by much, but they have slightly increased. What the British government definitely will want to do is want to keep the level of inflation and economic growth to keep at that level. Okay, so they wouldn't want to drop. Now, the only thing that is going to inject growth into the economic market is cuts in interest rates or cuts in taxation, possibly, even though I highly doubt that would be the course that the Conservative government take, or also further government spending. There have also been talks about corporation tax being decreased for certain G20 countries as well. So there's lots of things that the British government can do to feed the economy. However, in the meantime, after Brexit, if the UK do leave without a deal, what we can definitely expect is a downward trend. Okay, so when there is a downward trend, if it's as bad as the predictions are, then we need to start looking at something which is possible with regards to parity. Now, parity is definitely a very catastrophic situation for Britain. Most analysts over the last 6 years have been advising that there is now for the first time in a long time, a chance for parity with regards to sterling and the buck. Now, parity is when the value of the pound is equal to the value of the US dollar. So it's a massive drop in the pound. Now, what is the problem with regards to the value of the pound dropping so low? Now, the problem with that is that the UK is an importing country. Most of the economy is based around imports rather than exports. Okay. Now, when you're an importing country, it means that you have to have a strong currency. So the things that you are importing are less expensive. It is cheaper for you to buy. This is why the UK, as an importing country, have a very strong currency, and then countries like China and Japan, which are an exporting country, have a very low currency because it makes it cheaper for people to buy to them. So there's more chances of people buying from them than there is of the UK. So of course, if there is parity, the structure of the UK economy will definitely have to change massively. Another thing which I want to put people's attention to, because I had at least 3 emails this week with regards to the divorce bill, which keeps being spoken about on the news by Boris Johnson and his board. Now, it's a $39 billion divorce bill from the European Union. Now, people have been asking, what exactly is that? How is that going to affect the pound and the euro? Which is what I'm going to explain now. Now, the first thing I want to say is that the bill is 5% of the UK's yearly budget, so that it's a massive bill in a sense with regards to the level of its economy. Now, the UK is said to owe the European Union around 39 billion. Now, what we need to be clear about is the Prime Minister of the UK, Boris Johnson, is proposing not paying it. Now, of course, we don't know if there's going to be a general election and whether the Prime Minister will be the Prime Minister at that time. So it's a bit hard to say whether his opinion stands or not. Now, the 35 billion divorce bill is not just simply a one-time payment. Now, the bill is the continuation of future contributions to the European Union in which it agreed upon entry to the European Union. So this is its contributions which will continue as they agreed when the UK entered the European Union for a specific period of time, and it includes things like VAT, taxes on staff's salary, and a few other parts of the UK budget. Now, any withdrawal agreement will have to take this into account. So this is another thing which is being negotiated at the time period. Now, to answer the question which people were asking me, any indication that the UK is not going to pay it, okay, is going to, and it's been agreed by Europe that they're not going to pay it, will definitely benefit the pound massively. Now, any indication that they are going to pay it will affect the pound negatively and will affect the euro positively, okay? Now, with regards to whether it's legal or not, it's a bit of a gray area because not many people know whether it is legal or not. As I said, because Brexit is something which has never happened before. So the French Prime Minister has advised that if the bill was not paid, it is classed as a default. Now, this is a massive, massive problem for the UK's credit rating. Now, if the UK's credit rating is revised, this will also affect the pound massively, okay? It will affect the demand of the pound, and the pound will definitely start to move towards parity at least. Now, as I said to you, it's a bit of a gray area. It's not something which any analyst is sure how it's going to turn out. Even if they aren't paid and they are taken to court by the European Union, the world is still not sure exactly which court it will be referred to. So it's a bit of a gray area, but as I said, the main thing you need to know is that an agreement that the bill is not paid is amazing for the pound, and an agreement that it isn't paid will definitely affect it negatively. Now, I'm sure everybody who's looking at the charts with regards to the pound, no matter what currency they're looking at it against, they will see that the value of the pound has been dropping massively. Now, this is a graph which I put with regards to the exchange rate of the pound against the US dollar. It's over the past 11 years, and you can see the massive effect which Brexit has had on the British pound, as well as the previous recession that started in 2009. So we're definitely seeing a massive downward trend. Now, I did get an email also with regards to how is Brexit affecting the euro. Now, the answer to that really is it's not affecting it that much at the moment. The thing which is affecting the euro, and you will see later on in the webinar that the euro is in a massive downward trend, is more the economic statistics which is coming out of the euro. They are poor with regards to inflation, with regards to PMI, and really little any kind of positive information coming out, which is indicating there's going to start being growth in the European Union. So anybody who's trading the euro, I would be paying more attention on that. Now, I did a webinar last week with regards to different trading strategies. There was a brilliant 2x2 strategy, a crossover strategy for the euro against the US dollar. If you are looking for a strategy to trade the euro, then that would be a great webinar for you to watch. Now, of course, as I said, you need to be looking at the economic statistics coming out of the euro. You can look at that on an economic forex calendar. Of course, the effect of Brexit is going to be the effect to those numbers. Now, losing the UK definitely threatens the political and economical stability of the entire euro, which already suffers from internal conflicts and banking issues, which they have done since 2008. Now, something which not many people are talking about, which I want to say to people, let everyone know, is that the clear winner is going to be the US dollar out of the currencies. Now, the biggest currencies in the world which are traded are the euro, the dollar, the pound, and the Japanese yen. These are the top 4 traded currencies. Now, if the demand for the pound is lost, the demand for the euro is lost, investors are going to run to put their capital in the dollar. So the demand for the dollar will most definitely rise if the volatility and price movement on the other 2 currencies comes out negative. Now, of course, it's going to affect the euro. Most analysts, though, are indicating that that Brexit itself is going to hurt the pound more than it's going to hurt the euro. So far, we have seen it hurt both of them, and both seem to be in a massive downward trend. However, with regards to Brexit and how it's affecting the currencies, it is definitely, yes, affecting the pound more. Now, of course, we want to look at the chance of a deal. It's going to be very similar to the slide with regards to if there's not a deal. However, the effects are going to be different. Okay, any sign of a deal will definitely massively and positively affect the pound. It will increase. It will continue to increase and have an upward trend until we have an indication that Brexit is not healthy, should we say, for the British economy. So unless the economic statistics start to come out that it's affected inflation, interest rates, etc., the pound will continue to rise back to its traditional value, as we call it. What we also need to look at is trade deals. The UK will be on a road where they have to obtain trade deals with the world. After Brexit, even if there's a Brexit deal or even if there isn't, you need to be keeping an eye on how well those trade deals negotiations are. Any kind of speculation that they are not going well is likely to affect the pound negatively. Anything saying that they are going well is going to affect it positively. Now, you need to be a bit proactive with the trade deal negotiations and keep up to date with the news so you can trade at the right moments with regards to this. Now, why would the Bank of England lower its interest rates when it is so low? As I said to you, central banks use interest rates as a way of controlling the growth of the economy. If Brexit is affecting the growth of the economy and it is getting it below 2%, because most economies do aim of inflation between 2 and 2.5%, then we can be quite sure that the Bank of England is going to lower its interest rates. Now, lowered interest rates is negative for the currency and increased interest rates is positive for the currency. What everybody needs to be looking at is what the chances are of the interest rates being lowered or being increased. Now you need to look at that and try to predetermine it before it actually happens. The way you can predetermine it is looking at the level of inflation. Is it hitting its targets? If it's not, is it above or beneath? And the same thing refers to PMI. Now, also looking at the disruption of to the economy, and that's the British economy. So something that I wanted to point out, which was very interesting to me, and some things that a lot of people may not know, and that is if the UK leaves the customs union, so the euro, they will start carrying checks on British goods. There will be tariffs and taxes on British goods. This could lead to delays on ports such as Dover. Some fears that it could lead to traffic bottlenecks, disrupting supply routes, which of course all of this is damaging to the economy. The good side of it is that of course the Prime Minister and the government as a whole has prepared for this and has tried to keep everybody calm, and they have announced that there's an extra 2.1 billion pounds worth of funding which they have prepared in the case of a no deal. Something very interesting is 50% of food in the UK comes from outside the European Union. So there's three things that could happen. There can be food shortages. There could be high inflation on food. Okay, food can become unaffordable, and also could cause growth for UK farmers. Now I want to actually start looking at the charts to get you understanding of the charts. Now, this period here is where we saw indications of a deal. Okay, so you can see how amazing that was for the pound. This point here is when we started to see indications that there's not going to be a deal. So you can see exactly that what I've been speaking about throughout this webinar has affected the pound. Okay, now this is the pound against the US dollar. Okay, this is a daily chart and it's showing all of 2019 and parts of 2018 also. Okay, so you can see exactly how it is affecting the charts. Now, of course, if we see indications of a deal, it will start most likely doing this. If we see an indication of a no deal, it will start to do this again. Okay. Now, something else I want to speak about is that there will always be a retracement and price corrections in the market. So you need to be aware of this. Analyze it, try and determine when there's likely to be retracements. Okay, so in order that when you are trading with the trend, you're not entering at the wrong moments. You can use an RSI in order to pinpoint these retracements also. This is the euro. You can see a very similar outcome. However, as we stated, the euro downward trend is more to do with the economical data being released with regards to the euro. And again, we can see a massive downward trend and very, very clear retracements in the market. The only halt that we saw with regards to retracements is this period here, where we saw a complete actual price correction. We saw two higher highs before a continuation of the trend. Again, the euro is of course going to be affected by Brexit. It's a bit hard to say how it's going to affect it. The best thing that you can do is keep an eye on the economical data, which has been announced, and follow the trend. Okay, if we start to see an upward trend, to follow it, or downward trend, and again, keep to the retracements. Now, something else everybody needs to be aware of is gold. Okay, now gold is the safe haven of the world. Okay, when there is troubles and people have doubts whether the economical stability of a currency or a specific security is likely to change, it will affect gold positively. The price of gold will go up. Why? Because people are taking their money out of that asset and placing it in gold because they are more confident that the value of gold will increase the pound. What you can see here is as Brexit negotiations have gone pear-shaped, as they've gone sour, gold went up. Okay? If the same thing happens and there's Brexit without a deal, this will likely be affected again. This is also Bitcoin, something which I want people to look into, and there will be a webinar purely based on this, is that if the value of the pound is massively going down and losing its value, then people are going to have fear that their money, their savings, their current account are going to be losing its value because the pound is losing its value. Don't forget, holding your money in a currency, even if it's your local currency, is still an investment. Okay, that currency can go up and down. So what people might start to do possibly if we're heading towards parity is start looking at alternative currencies. Now, the only currency that they will be able to use is cryptocurrencies. Okay, so I want people to be looking at that idea as a whole. Okay, we can see that since Brexit negotiations went sour, there has been a slight upward trend, even though we've seen a downward trend ever since. Okay, now that brings us to the end of today's webinar. Should you have any questions, feel free to ask, and you can send an email at john@fourtimetutors.com, and I'll get back to you with regards to your questions ASAP. And any other questions or consultations, feel free to get in contact with me. I hope today's webinar was informative, and of course, anything that anyone needs, please let me know. Please trade securely, responsibly, and trade safe. Thank you.